What should I look for in company stock? Always look for companies that display good corporate management and good fundamentals, like good cash flow, good earnings stability, a good PE ratio, and their return on assets. Are you wondering what the PE ratio is? Well, you can get a definition for that and tons of other stock investing terms totally free, a free download. Go to www.freeinvestinglessons.com, and on the left side you'll see a link for a stock investing term glossary. It's a PDF file, totally free. Go for it. www.freeinvestinglessons.com. Look for companies with bright futures ahead of them. Past performance may be a good indication of returns you'll get in the future, but unfortunately, it doesn't always work out that way. So if you find a stock that you're interested in and you've discovered it's performed well in the past, also make sure you take a look at the predictions of the analysts for the future. And this is a good place to sneak in that a full-service stockbroker helps with that, especially when you're starting out. I strongly suggest it. And you can also go to http://finance.yahoo.com. No www there, just finance.yahoo.com. That's a great place. I love that place for looking at stock charts and histories and whatnot. Don't take stock advice from friends unless, of course, that friend is a top-notch broker or a very wealthy person who has already had great success in the marketplace. And hey, do whatever they say. Research your stock and move slowly. Be sure not to act based on your emotion, and use your head and charts and actual information. Take advice from one of the richest men in the world, the second richest man in the world actually, who built the value of his investment company's shares up from $15 a share when it was first founded, up to $147,000 per share. That's right, $147,000 for one share. And you thought Google was expensive at around $500. This guy has a $147,000 share company. That's Warren Buffett. And the company is Berkshire Hathaway. Subsidiaries like Geico, Fruit of the Loom, tons of others. Warren Buffett, arguably one of the best businessmen alive, has said repeatedly that he never ever buys into companies that have convoluted business strategies and plans. In other words, he needs to be able to follow every little thing about their process. Mr. Buffett recently explained that his investment decisions are based on identifying significantly undervalued companies that can offer substantial returns in the long term. When asked about the necessary qualities for a successful investor, he said that his chief and most valued qualities were patience and a calm temperament. Okay, so say you're no Warren Buffett. You don't have his money. The thing is, you don't have to have it. You just need to get started using some of Warren Buffett's investment principles. And if you want something else for free, you can go to www.stockinvestingprofits.com. The link or the address is at the bottom of this video, and get the free kit. Parts 5 and 6 walk you through finding and qualifying what are called value stocks. Stocks that are backed up by actual money, not media hype or anything like that, but actual money through business practice. These are the kind of stocks that Warren Buffett would invest in himself, most likely. Of course, it's personal. And it's free, so you just go ahead and grab it. Start on parts 5 and 6. That's www.stockinvestingprofits.com to get a free 7-part kit sent right out to you.